A lot of traders are still struggling to understand what liquidity is and how to find it. And understanding where liquidity is and how to use it is the number one most important skill when it comes to trading. And to understand liquidity a little bit better, let's just keep it really, really simple. And let's say we have an onion, right? A normal onion that you buy at the grocery store. But let's just say the normal price of an onion is going to be $1. If the price from an onion goes from $1 to $5, there's going to be very little people buying onions, one onion for the price of $5. So the onions are going to sit there and the price is going to plummet because there's very few people willing to buy one onion for the price of $5. And the opposite is also true, right? Let's say the normal price of an onion, again, is normally $1, but the price somehow plummets all the way down to 20 cents or something like that. What's going to happen, because there's going to be very few grocery stores willing to sell their onion for such cheap prices at 20 cents, the price is going to shoot back up to the normal price of $1. So that's how you can understand liquidity. But fair value would be, and this is not fair value gaps, fair value would be where buyers and sellers agree that the price of a particular asset or an onion or whatever it is that you're trading is considered to be a fair price, where there's a good amount of buying and selling happening at these prices. So this is why using the volume profile is so important, because we just draw it on the chart. And as you can see here, when the price touches this green line, this is considered that $5 onion we talked about. Nobody is willing to come out here and buy at these prices. So what happens? The prices dump all the way back down. And what happens when the prices get too cheap? Remember that 20 cents onion, that 10 cents onion? What happens when we get here? The price acts as support, and then we push back up to these levels. And then what happens when we get to the point of control? We get to this purple line, we tend to just see a lot more consolidation and chopping at these levels, right? So this is why it's important to understand liquidity and how we use liquidity in context to place our trades for long and shorts.